The crypto market has seen a flash crash starting with Ethereum over the last 48 hours. Frank Holmes, executive chairman of HIVE Blockchain Technologies and CEO of U.S. Global Investors, is back to talk all things crypto. I'm sorry, Frank. I know you're dressed up for gold, but we're not.
What are you doing? Not gold. This is holy jumping. I don't know how I'm going to handle all this. I have to go to the crypto suit now. No gold suit. Okay.
We're gonna have to put that gold suit aside for the day. Yeah, your crypto suit looks good too. I like that.
You know, it's been a hell of a ride, as you would say, because it's extremely volatile. In every presentation we make, we try to explain that the DNA of volatility of gold is the same as the S&P 500. And for 20 years, it's outperformed the S&P 250%. But when it comes to Bitcoin, Ethereum, the volatility is 5 times greater on a daily basis what gold is, or the stock market.
Yeah, that's a great point. Now, people are concerned that Bitcoin and Ethereum has fallen off their highs, but when you look at the price, it's still very high, right? It's still, should people be worried at this point?
No, I think we've seen this incredible volatility when something is disruptive. Think about Tesla. Tesla has the same DNA volatility as Bitcoin and Ethereum.
Yeah.
In fact, Ethereum is more volatile than Bitcoin, like silver is more volatile than gold. But whenever something is disruptive and it's like digital money is coming into the market stream and in full throttle this past year, it's going to have all these naysayers and early adopters. So we have seen now the gold market, come through a correction here, and everyone's focused on Ethereum and Bitcoin. I say that they both are incredible alternative asset classes. But this flash crash in Ethereum happened a little over a year ago when Ethereum surged to 300, fell to 100, came right back up to 200, and sort of went sideways before it went on to these other levels.
Okay, now let's talk about Bitcoin and Ethereum now. I know you've done a lot of research on the relationship between these two cryptocurrencies. I'm looking at the Ethereum to Bitcoin chart as a ratio. It spiked earlier in the year with Ethereum going way up, and now it's actually coming back down to historical averages. So it's more or less normalized to the average. From here, do you see Ethereum continue to outperform Bitcoin?
I do, because they're very different, David. You've got to look at the industrial. So when we talk about silver, it has much bigger industrial footprint because of solar panels. Well, when it comes to Ethereum, it's a smart contract. So when you hear about JP Morgan stable coin or other people coming with these stable coins, they basically are using Ethereum algorithm. That is a pent up demand. And now we have this explosion in decentralized finance known as DeFi. Last year grew by 20 billion. I think in the first month of this year it was 30 billion. It's all in the backbone of Ethereum. So Ethereum is a unique animal in its own way. It's the second biggest market cap and most liquid cryptocurrency. But I think Bitcoin is like the collector's item. It's like, for me, the Andy Warhol original paintings. It's going to go up in value as more people come in and buy it. They can buy in fractals. And we're seeing that in what's called Metcalfe's Law.
Yeah.
Metcalfe's Law explains why you're seeing this rise in crypto.
It's very interesting that you compared it to an Andy Warhol piece of work. And I had this discussion with an analyst last week about the valuations of cryptocurrencies. And the conclusion was that, look, it's very difficult to value something that doesn't generate any cash flow. It's ultimately based on market perception. Beauty is in the eye of the beholder. If you think Andy Warhol is worthless, you're going to pay $0 for it. Likewise, if you think Bitcoin is worthless, you're going to pay $0 for it. So why is Bitcoin worth $48,000 in the eyes of the beholder, so to speak? Can you give an explanation?
And Bill Gates, one of the richest men in the world, doesn't buy Andy Warhols, and he doesn't like Bitcoin. So what does that mean? Whereas friends of mine have bought the prints for $10,000, I've seen their mouth go up to $250,000. So, I don't want to get into that basic what's good or bad. If you like Warhol art, and Metcalfe's Law will prevail there too. So I think it's just a side story. What's really important, and we saw this happen last year in GameStop, all these kids that have been playing those games and playing war games and internet games, they've been being rewarded in digital money in that game. They have their own digital currency like Monopoly money. And if you're really good, you got big bonuses and you could upgrade and buy more software. Well, we have all these Generation X and millennials that are used to going to GameStop to buy their equipment, or they've been going on the internet. They're very quick to buy into the concept of digital money, DeFi finance, because they're used to it. And I think that when we heard all this drama over GameStop, well, all these kids that were trading the stock were also buyers, just like people that bought Starbucks, went and bought Starbucks coffee every day.
Yeah. When you look at Satoshi's white paper, The Origins of Bitcoin and the original protocols for Bitcoin, were you surprised that it's become more of an asset for speculation over time?
Well, I don't think so. I think it's a remarkable piece of engineering, but really it's on the backbone of telecom. Blockchain really came out in the early 90s before the internet was released. And it's because the banks actually are the biggest movers of money? Not. It's telecom companies that do all the wiring between. And then the idea was, could they create a blockchain, a ledger, this open ledger to be able to track everything? This concept that Satoshi basically took was already there and polished it up to create decentralized finance, as just the same as a lot of gold bugs don't like central banks printing all this money, practicing MMT. The new world, the new millennials, etc., were addicted to this digital world. And that's why it grew. And we can see this past year what happened when the supply halved for Bitcoin. And that only took 6 months, and all of a sudden prices doubled and tripled. So I remain very bullish, but they're going to be extremely volatile.
Does that, what you just said, it's a great bullish case, does that at all concern you in any way that it's mainly driven by younger investors, like you said, herding into the space?
No, because they can speculate. They're a young person. It's my age that should be careful of the great speculation. A younger person, they've got 40, 50 years in front of them. As you get older, you should tone down your speculation. And one of the reasons I was trying to launch an ETF in the space and I wasn't going nowhere. So that was the whole creation, the concept, when I got invited to participate and became a principal co-founder of HIVE Blockchain Technology, which was the first public company mining Ethereum and then Bitcoin in the Canadian capital markets. And it attracted $1 billion of US money managers going into Canada to participate in other blockchain companies.
Yeah. Well, you have some good news to share with us about HIVE, but just a minute now. Last question about the markets. You mentioned that these kids are speculating. Well, when they get older, Frank, when they become close to retirement age and they don't want to speculate in volatile assets anymore, would they be dumping their Bitcoin and Ethereum, and then the biggest holders would then release them into the markets and we'll have a big sell-off?
I don't know. It's like asking me, when the internet first came out, is Ask Jeeves, is he still going to be around? He's history. It evolved, and then Google, and then Yahoo was first, and then Google turned around and basically, as they like to say, Uberized Yahoo.
Yeah.
I think that it's early innings in this digital world, and I think it's only going to grow. It's going to remain extremely volatile. We saw that now in PayPal, you can buy Bitcoin. If you go to some of these websites, in particular in stocks, you can go to Robinhood and you can buy Bitcoin. So it's a big game changer what's going on in the capital markets.
Okay, now HIVE, let's talk about HIVE now. It was named 2020's most liquid TSX listed stock. I'll let you explain the good news here. What does that mean?
Well, I think, David, when I first launched the HIVE Blockchain as the chairman, before I became the executive chairman involved more in the running the company, to me, it was fascinating to watch the sort of journey of how it attracted so many gold investors who were reluctant to go on one of these crypto exchanges, fearful of hackers, and they use HIVE as a proxy. And HIVE was and has been a phenomenal proxy. It went up from 30 cents from the seed financing all the way up to $6. And as the winter took place for the crypto space and Bitcoin went from 19,000 to 3,000, HIVE fell 90%. Yeah. HIVE has turned around and made new highs and is basically as a proxy and is traded to over 2 billion shares. And in the US on the over-the-counter market, it was the fourth most liquid stock on the over-the-counter market, and it traded almost 500 million shares. So it is becoming, it moves by the hour. It's up by the hour. Ethereum, Bitcoin are up, and if they fall, roll over, it goes down. So quant funds are also using HIVE as a proxy for this space. HIVE is the only public company that is mining both Ethereum and Bitcoin. And this is important strategic difference is that last year, Bitcoin was up about 300%, Ethereum was up 475%, and HIVE just exploded up 2,500%. So HIVE has been the most profitable so far crypto mining company when you take a look at all these other companies in the US and Canada. And the future is how much more equipment can you get? We're seeing a huge shortfall. There's no more equipment, just like there's no chips for car companies and they're having a difficulty with GPU chips. We're seeing this also for crypto.
I'd like to get a bit of your history here now, transitioning into the crypto space. People know you as a prominent figure in the precious metals and resource sector. You've written books, for example, on mining and gold, and you've worked with miners closely throughout your decades of your career. I wonder why you decided, okay, I've worked with precious metals miners, now I'm going to start working with crypto miners. How did that transition take place? Can you walk us through the rationale there?
Couple things. One, when the CEO of Fidelity goes to a crypto conference, which people are spending $2,000 to attend, and it's sold out, and she has her CFA, Abigail Johnson, and she does not go to investment conferences. So here is this person speaking at a crypto event for a couple of years in a row. She's been doing her own Bitcoin mining long before all of a sudden it became mainstream. That was a big wake-up call of looking for the future. And I think the other part was the ecosystem, they like to call it. There was 10,000 nodes for Bitcoin, and Ethereum had 30,000 scientists around the world in this ecosystem talking about this being the future. There are not 30,000 engineers talking about gold mining and investing and the ecosystem and nodes around the world. So that really impressed me about the depth and breadth that just which was basically invisible to the securities market, had grown.
Okay, so what were the major challenges for you then, setting up a crypto miner? I mean, I'd imagine that it's a very different business model than a resource, a physical asset miner, like a gold miner or a silver miner.
Well, you buy equipment. We only use green energy. It's been very, very significant, high ESG footprint. We're mining in Sweden and Iceland and in Quebec and shortly here in New Brunswick. And it's all green energy. So that was a key component difference. Some of these other miners are using coal. And I think the other part was in this sort of looking at it, we have to buy equipment just like you produce gold. We use green energy and we use the technology to be mined in the cloud. So we are mining a commercial asset that we can sell. It goes 24/7. It's a phenomenal volatility also in your profit margins. So you can have this incredible swings in your gross margins. Right now, we're experiencing 90% gross profit margins in mining Ethereum. Even at 1,500, we're corrected from 2,000 range. So I think that this is a phenomenal industry and there's going to be many new derivatives come from it, and it has nothing but lots of blue sky, but extremely volatile.
Yeah, I'd like to understand the mining industry a little bit more in terms of the crypto space, not gold mining. But drawing parallels to the gold mining space, do you think the crypto miners are facing some of the same challenges like the gold miners are? Gold miners are running out of reserves, the exploration companies, the economic deposits, as you know, are drying up around the world. Similarly for crypto, if you take a look at Bitcoin, for example, there's only 21 million Bitcoins available to be mined. Around 18.5 million have already been mined. So are crypto miners running out of reserves, so to speak?
Well, definitely when you look at Bitcoin in particular, with this halving taking place every 4 years, and a finite number of Bitcoins will be ever produced. And understand it, David, every 10 minutes, it's a drop puck.
Yeah.
And all these miners around the world go in to get the chance to validate that transaction. And if they do, they earn 6.25 new Bitcoins. And it's extremely competitive. So you have to have the fastest technology.
Sure.
And to survive the downdrafts, you have to have the cheapest electricity, or you're going to have great difficulty. So there are many pockets of electricity that are stranded. And so this whole exaggeration that Bitcoin is using up all the world's electricity, et cetera, it's greatly disinformation, just like gold is so bad as an asset class by environmentalists. I think that we're going to see these data centers become very valuable because we're all Zooming it now or using these other service providers. COVID was a big game changer for how people conduct themselves for learning in school, for business transactions, et cetera. So you're going to need more and more of these data centers. You need them for rendering. You want smart cities. Our GPU chips then can be used to look at everyone in a city with cameras and be able to see who's not paid their parking tickets. This is going to happen. This is in New Zealand right now. It's definitely in the UK, and it's going to continue to grow.
Yeah. Do you think, is it true that it becomes harder and harder to mine a crypto as less of it is available to be mined? You need more energy, more resources per coin after that?
You don't need so much the more energy. You need better computer systems and faster. So the S19s by Bitmain, the Super Pros, and they have all these new names coming out like the BMWs and Mercedes, new series of cars. But what's important here is that you have to get this new technology, but there's a shortage, and the shortage is not going away. These companies are sold out. Taiwan Semiconductor is no longer going to give the ASIC chip manufacturer more chips to be able to manufacture these miners. So we're going to see a real supply side shrinkage. So therefore, the entrants, people competing for mining those Bitcoins, are going to drop off.
All right. Now, looking ahead now, Frank, for the crypto miners, where's the future for crypto miners? What kinds of coins should they be focusing on for the highest margins to meet the biggest demand? What are the coins? What are the sectors you would be paying attention to?
For us, it's been Bitcoin and Ethereum. We announced today that we've expanded our footprint, that we're pushing for 2,000 petahash. We're almost there. We made that to get up our ASICs because we are the biggest GPU miner for mining Ethereum in the world. Now, there's many other coins. We've gone back and forth with the Ethereum Classic, et cetera. But the issue is that we're so big that all of a sudden we could be too big of a player in that coin. So we really just want to stay focused on Ethereum, which we think has a 3-year window of huge opportunities on the upside, and Bitcoin mining.
I know that physical miners have all-in sustaining costs. For example, gold miners, typically that's around $800 to $1,000, the all-in sustaining cost. Is there a floor for Bitcoin and Ethereum price for you? If it hits below that floor, it becomes unprofitable to mine?
Well, it depends what technology. If you got your S9s on right now, they're profitable. But as soon as it falls below 15,000, you're no longer profitable.
Sure.
And you're going to need S19s really to be able to stay ahead of the game. But I think you have to have the cheap electricity. You have to have the new chips that are out there, and there's a shortage of them. So it's a very bullish scenario for crypto mining. It's a very profitable business if you can have access to these chips and you have transparency. Now, there's a couple of new guys coming in to knock off HIVE success, et cetera, but they're not HIVE. And I think that investors out there have to be very, very conscientious on transparency, because that's something that's been a big issue for me in the whole HIVE blockchain experience. They have to make sure the track record of these people, that they believe in good corporate governance, that they do believe in the green energy. These are important factors because a lot of them don't.
Yes. All right. Well, Frank, continued success as always. Thank you very much for your updates today on the crypto space. It was a great talk. Thank you very much.
Happy investing.
And thank you for watching Kitco News. I'm David Lin.